Okay, so let's just get it. Let's start it over. Okay, so we've got our daily chart here. Okay, we've got our daily candles here. All right, our CRT bias is what we use to track daily bias. Okay, so you can see from the chart up here, the indicator shows us that we have a daily bullish bias going into the next day. So the liquidity pools we're going to be looking to target are going to be previous day's highs. Okay, and after previous day's highs, obviously anything above that, and then vice versa for bearish, right? So anything for bearish would be previous day's lows, and then beyond that we look for, the next closest higher low, right? So going into the 4-hour, we're just going to basically confirm what we're seeing, right? So on the 4-hour, I can see that we have a very strong bullish push to the upside, right? We have some imbalances here that we have already kind of overtaken and closed through. Okay, so that confirms, or that supports, price moving bullish and going higher. So what I want to see now is for price to continue higher, but obviously we're not just going to expect price to go higher, right? Because we want to see that cycle of accumulation, manipulation, and then distribution, right? So we want to see the stop hunt after the manipulation, or we want to see the stop hunt after the accumulation, sorry, and then we want to see the move up to the highs. Okay, that's the model we're looking for, and so that's what we want to see, and that specifically we want that to happen at the New York Open, right? Because we're trading futures, that is when we look to trade. So from 9:30 to 11 is when we look to take our setups. Okay, so if I go over to the 15-minute chart here, and then I kind of start to map out the day, or start the day off here, you can see that we are just prior to the 9:30 here on Friday. This is where the day closed. Okay, so I'm going to push price forward to the next day, and we're going to start the next day. All right, and I'm just going to fast forward to just before the New York Open. Right, and you'll see on the chart here what the indicator does, or what my indicator does, is it kind of maps out pre-market liquidity for you. So if you were trading London, right, you'd be looking to trade off of these pre-market levels. Okay, so you can see here we had a sweep of that level, right, and it came down to the other side, and then we had a sweep of this level, and then it came back to their side. Right, and those are the setups we look to take. That's what the indicator helps you do. It helps you kind of determine your pre-market liquidity before the session starts. Now, if I go over here to the New York session, and I start the day just before New York, which is, let's see, right there, okay? You can see the indicator will paint out your pre-market highs and lows for you, right, before the day starts. So our day starts at 9:30. What we want to see is for price to sweep out one of these levels, okay, and then continue in the other direction, or sweep out one of these levels and then give us a run, continue down to further liquidity. So we had said that our bias was bullish, right? So what we're looking for here is we're looking for price to sweep out the low, right, and then continue higher with the manipulation. So we can see here that we actually have a bullish structure here on the 15-minute. All right, we've got like a 15-minute order block here. Okay, so, and then we have the sweep level. So what we always want to see is we're following our 5-step checklist. Okay, so if you guys don't know what the checklist is, there should be a link in the description for you guys to download that when the stream's over. Or in my previous videos, I know there's going to be another, there's going to be a link to that checklist, but there's going to be 5 steps to this checklist, right? So the first step is that we always look for a higher time frame point of interest, okay? So in this case here, we have a 15-minute order block that we're looking for price to trade down into, right? Next is that we're going to look for that liquidity sweep, right? So liquidity sweep sweeping underneath, one of these pre-market levels, or any, kind of intermediate swing lows that we see, okay, into that higher time frame point of interest, right? So we're sweeping liquidity underneath these lows, all of these lows here, into a order block, right? And then after we get that sweep, the next thing that we want to see is some kind of displacement, right? So we want to see a reaction to the order block, right? So if I move price forward, here's 9:30, right? So you can see here we have a very nice move to the upside, right? So he hits the level, okay, and then we get this big push to the upside. Now I'm going to drop down to the 1-minute chart, okay, because this is where we actually look to take the entry, if we're going to take the entry, right, is we have a sweep of the level into this point of interest here, okay, and then we have a move away from that level that confirms the sweep, right? So how do we confirm the sweep? Well, we need a change of character, basically. Okay, so if I play price forward, I don't know if we're getting the exact setup here, but here we have a break of this high. Okay, and that gives us a change of character. So that confirms for us that this valid sweep here happened. We have a big push away. And then when that happens, we want price to come back into the level, right? And it starts to retrace back into the level. This is our actual model. So when it starts to come back, there we go, right? When it starts to come back, then we have our range. So we take this high and this low. And now inside of this range, right, we're going to look for, again, a discount POI, and we're also going to look for liquidity for it to sweep, right? So here's some like internal swing lows, and then we have a discount POI, which is this order block right here. Okay, and then we're going to look for price to react to that. So if it trades away from it, then we'll take it. If not, okay, so like right there, we have a trade away. So we have a reaction, a trade outside of that, okay, and then this would be where we could take it a position. Your stop would go underneath the manipulation, right? So about 60 points, and then we just look for a 1-to-1, right? And if we get to 1-to-1, then we can look for a 2-to-1. So just play this out. All right, there's our 1-to-1, and then let's see if we get 2. And no, we don't get 2. So normally we would just take the 1-to-1 if it was, you know, like a 60-point trade is, you know, plenty, right? Basically we go for, you know, 30 to 50 points if we can. 60 points would be good enough, but if you wanted to go and hold for like a 2R or run out the high, then after we get the 1-to-1, we would set the trade to break even, and then you would look for, you know, price to go to 2R. And then in this case here, like, you know, if you went for the 2R, obviously you get stopped out at break even, so there'd be like a no loss, no trade, no win day. But if you take the 1-to-1, then you're good, right? All right, now I want to show you guys basically that this setup happens on the opposite end as well, right? So I want you guys to really fully understand the setup again, because we went over this last week, okay? And I want you guys to really grasp what it is we're looking for, okay? So again, we have some sort of higher time frame point of interest, right? That's step 1. Okay, so whether it's an order block, whether it's an imbalance, you know, whether it's taking out a swing high or swing low, okay, that's going to be your higher time frame point of interest. You want to see that happening on a time frame that's higher than your entry. Since we take entries usually on the 1 minute, that's going to be like a 15-minute, a 1 hour, 4 hour, right? Usually 15-minute or 1 hour should be good enough. So for a short, okay, you want to see price go into that higher time frame point of interest, okay? When that happens, you want to see a sweep, okay? Now that could be a sweep into this higher time frame point of interest, but it could also be a sweep, you know, on that time frame that's like an internal sweep as well. But we want to see some sort of sweep of liquidity going into this level, okay? Once that happens and then we get the sweep, the confirmation is going to be when we get a change of character, right? Because that confirms that this level was valid and that we are actually trading away from this level, going to the next, you know, the opposite end of the draw on liquidity on the other side, right? That tells us that this was a valid POI, because otherwise, if we don't get a change of character and this just, you know, kind of makes a higher low here, then what price can do is just go beyond that, right? And go to the next point of interest. And then we get that one to give us a change of character. Okay, so then that one is the correct POI, okay? So this would be a good example here, right? So we have a sweep of liquidity, okay, into a higher time frame point of interest, right? We confirm that sweep, you know, with a change of character. When that change of character happens, then we get a retracement, right? Price starts to retrace back into the range. Okay, when that happens, now we can draw a range from the high to that low that starts the retracement. Okay, now inside here in the premium, since this is a short setup, right, there's going to be a lower time frame order block, imbalance, something in here, okay, in this premium. That's going to be your targets you want to see. And then also, as it's retracing, what it's going to do is it's going to create some internal highs for it to sweep. So it's going to make like a lower high here. And then we're going to come up here and sweep that lower high and then trade into that order block or imbalance, whatever it is. That's going to be where you take your entry once we get the trade away from that zone. So if it hits that entry, reacts to it, and trades outside of the zone, now you take your entry, right? And then we're going to expect price to go on to give us that 1R. Okay, here's a good example right here, which I'm going to show you right now, of a short, okay? So this high right here, if you look over here, is we swept the 15-minute range highs over here. Okay, this is a 1-minute chart right now, but if you go to the 15-minute, obviously it's going to be a 15-minute high right here. Okay, it's also above this 400 big figure level, which is a psych level, right? And this level right here is swept. You can see here we took out that level, right? And then we traded away from it. Okay, so not only do we have, so now we swept the highs here, we also swept the internal high here, right? This high right here, this 1-minute high. Okay, now how do I know that the sweep is valid? The sweep is valid because we get a change of character, right? So here we can see we sweep that high, we get a change of character right here. Okay, because we have the swing low that creates the swing high that takes out that high, right? Gets traded back through. Okay, the body closure here below these bullish candles is where we get the change of character right here. Okay, actually there's a smaller one here. The indicator caught that right here as well. Right, so either one of those, fine. We get a change of character which confirms the sweep. Okay, I like this one because this is the actual swing low that comes up and takes out that high, right? There's a middle one here in between these two, right? But if we take out the bottom one, it's even better, it's even stronger. Okay, but when it does that, then obviously you're not taking it right there. Okay, that's not the actual entry because you got to confirm this, right? So price is going to come back. After it makes a low, it's going to start to retrace, okay? That's when you can start to draw your range. So you take that high, you take that low, okay? Now, inside this range in the premium, we're going to look for a point of interest, right? An obvious point of interest. Usually it will be an imbalance, right? If there's no imbalance, then you take the order block, okay, which is here, right? You guys can see where I'm going with this, right? So when this happens, right, this is your POI, but also remember that extra step in here, right? We want price to create some sort of internal liquidity inside of that range before the POI in the premium for price to sweep. Okay, so right here, what it does is it creates this little minor swing high right here. Okay, just before the order block. Okay, and then price comes up and sweeps that right here, taps into the order block, okay? And as soon as it taps the order block, when we close underneath this high, right, to confirm that we've now swept this high, so it could either be this candle right here, this candle right here, or even this candle right here if you're a little bit late, okay? So we have a short position. Let's see, let's just use this late one right here, okay? So you weren't that quick on the entry there. So that short, okay, now your stop has to go above the order block, right? At least above the order block to be safe, right? Because you don't want price to obviously trade through this OB. So you put it right above the OB, so about 60 points, okay? And then you're going to look for a 1-to-1, okay, which is right here. And you'll get that right here on this first move. It does a little retracement, and then it goes a little bit further down to about here. And let's see, 2-to-1 would be about here. Okay, let's see if we get a 2-to-1. And no, it comes really close, but let's see. This is only 12 o'clock, so it might happen later on. There we go. Okay, so eventually you do get a 2-to-1. All right, after a lot of chopping around. okay? But you can see the same concept, right? Price takes out some sort of higher time frame point of interest with a sweep, right? We get a change of character. Price then retraces, creates a range, okay? We sweep some sort of internal liquidity inside of a premium point of interest level, right? It taps that level, trades away from it, okay? As soon as it trades outside of it, you can take the entry and then wait for a one-to-one. Right, that was Monday's trade. Okay, let's clean this up. Let's go into the next day here. All right, so let's go to the daily and let's see how we ended up the day on Monday. So here's how Monday ended up. Okay, you can see that we have a pretty big bullish candle, right? But we swept out both sides of the range. So what we do here is we're going to look for price to close above or below the 50% level, and that's going to determine our bias. Okay, so you can see we closed above the 50% level. Okay, so that would give us a bullish bias going into the next day. All right, now keep in mind that we've just swept this level up here, okay, and also these levels up here. So we have taken out some liquidity above and we've retraced. All right, if we go to the 4-hour chart here, let's just make sure we close out the day. Monday. Okay, here's Tuesday. All right, so you can see here we've taken out these levels here. We've gotten a little bit of a retracement. Okay, so if we want to go higher, again, like I said, if we want to go higher, we want price to come down first, and we want to take out some lows before we do that, right? So, you know, this low looks pretty nice. We also have the lows down here, all the way down here as well. Okay, let's take a look at the 15-minute. And see where we at Tuesday. Oops, we went a little bit too far here. Okay, so you know we can see we've got a low here that we can take out, which is Asia lows, right? And I want it to come down there before the open, so it actually did that a little bit too early, but that's okay. Let's see. 1, 2, 3, 845, 915. All right, so we've already taken this level out here. So now we've got our New York levels, okay, high and low. So now we have these pre-market levels to work with, this high and this low. Since we've already swept this one, right, it looks like we might have to go for, you know, another level up here. Now, if I push price forward on the 1 minute, all right, take a look at this here. And we'll go to 930. 930 is right here. Okay, that's exactly where we are, right? So here's our New York levels, highs, and New York levels, lows. Okay, here's 930 at the open. The first thing that we do is we come up and we spike that level, okay? Then we close back inside. So remember, see there's a 15-minute imbalance here that's marked on the chart by the indicator. So it'll mark all the, 15-minute OBs, 15-minute imbalances on the chart for you. So here we have a reaction to a 15-minute imbalance, okay? And we also have a sweep of liquidity, right? So we have our first two conditions of the checklist met. First is a higher time frame point of interest, which is going to be your 15-minute imbalance. Second is going to be a liquidity sweep, right? So we swept liquidity going into that imbalance. Next, we're going to look for change of character to confirm the sweep. So all we need is for price to come back through this low. Which we do right there, right? And then the indicator will show you, right? We got a change of character. We have the shift through, okay? And now we just have to wait for price to retrace, okay? Which we get a little retracement right there. Let's see if it follows through on that. Okay, so there we go. So we have a 3-bar swing. We've got a retracement. So now I can mark my range, high to low. We also have, next we're gonna look for some kind of internal liquidity formed, right? In the form of a swing high. So we got that right there. That's sort of not really that good. Let's see, that's a little bit better. Okay, so we have a swing high right there, okay, that has been traded into our point of interest. I would say, you know, because we don't have, we got an imbalance here, but we traded through it. I would say that this whole kind of like, this whole wick would be kind of the point of interest, okay? So we trade into that point of interest, right? And then we hit that, we take out the internal high that's created here, okay? And then we also trade away from it. So we hit it, we trade away from it, right? At that point, you can take the entry. There's an imbalance here. So what I'd like to do is actually confirm a little bit more and just have it trade through this imbalance, because I don't want it to bounce off this imbalance and then go higher. So I'd want to see it go through this imbalance first, which yeah, it does there. Okay, so right there you could take the entry. I would, you know, either take it there, or you could look for, you know, retracement back into like a psych level here, 220. So if we look for a retracement back into, whoops, not a long position, into 220 here, that would be ideal. Maybe even 250 would be great. Okay, and then we would put it above our stop, above this level up here, which is our point of interest, right? And then looking for a 1-to-1 would be down here, taking out these lows. Okay, so let's see if we get triggered in on this. Does it come back? Yes, it does, right there, right? So it comes back, hits the level, and there it is, right? There's our 1-to-1. And then obviously, like I said, afterwards, if you want to go for 2-to-1, so once you hit the 1-to-1, you can go for 2-to-1. I would set your trade to break even. In this case here, we would get that, right? You can see that it doesn't come back. It almost does. It doesn't come back here. Actually, no, sorry. This is before we hit. So the 1-to-1 happens. We set the trade to break even, and it just tanks, right? It doesn't even give us retracement. So we get a 2-to-1, and then you can hold for as long as you want, right? After 2-to-1, what I like to do is I like to trail the candle, the candle's high prior to that. So like I would be trailing, so this right here, let's see what the next candle is. Okay, so like right there, I would trail right there. Okay, so I'd be at just about 2R here. I'd be locking in the 2R. If price continues down from here, great. If it doesn't, if it comes back and hits me, right? So now I've got extra run there. Now I'm going to put my stop right here, right? Now I'm going to 200 points locked in. Okay, next candle. There, right? So I get basically 200 points out of that trade. All right, and let's see where this goes. I think this goes back up from there. Right, and then we get some more consolidation. Okay, so that was Tuesday's trade. All right, now on the flip side, let me see if there was any buy setups here that happened after 9:30. Let's see. So yeah, so we have, okay, if I go back out here and take a look at the 15. So we've got this low right here, right? So that's this low. Let me just move this across so you can see this. Okay, now I'm looking for a sweep of that level, which is right there. Okay, a trade away from that level, which gives me a change of character. So let me go back here. So we get the sweep. Okay, we have a change of character after price trades above here. And then price moves away. Okay, so now I have my range as it retraces this high to this low. Okay, and now what I'm looking for is a discount POI and then also internal liquidity just above that, right? So we got like this swing lows here in front of this imbalance slash OB. Okay, right here. So if price were to come back into this level, I'd be looking for the buy. So let's see if it does. Nope, we just basically move away from it. Okay, so no setup there, unfortunately. But that would be what we look for, right? So if price were to come back and hit this, I think it does eventually, but maybe not in this day. Let me see if this comes back down here at some point. Okay, 3 o'clock. Oh, here it comes. All right, we did come back for some kind of liquidity over here, right? But that wasn't part of our setup. So, okay, let's go into the next day. So let's see what the next day gives us. Let's clear all this. Okay, so Tuesday was bearish, right? We closed bearish, but we swept the low and we came back up inside. Okay, so that is going to be a bullish bias for us, so long as price respects the 50% range of the previous candle. Okay, so you can see we're closed just underneath it, but the reason why we're bullish is because we did sweep previous day's lows and we closed back inside the range, pretty high up as well. So let's go into the next day and let's see what the 4 hour gives us. Okay, it does go up higher, and boom, we go straight through, right? So this was like overnight news, or something happened overnight. Let's go into 2. Okay, so this is a little bit too far maybe, but obviously you can see now we had a bullish bias, right? But you know, this move from this low to this high was over 1,000 points, right? Even just this move here, this is the overnight move right here. This was, you know, 800 points. Okay, we did take out this high as well. Okay, so now even though we have a bullish bias, it may not be, you know, prudent to, you know, try to go for longs here after we just blasted off, right, 800 points up into the atmosphere and took out these highs. Okay, so we got to be a little bit cautious. We want to see price trade back lower first into some sort of, you know, higher time frame point of interest or bullish point of interest for then price to go higher. Okay, so what we have now is price is trading down into this big, you know, 4 hour imbalance down here. Okay, on the 15-minute, let's take a look at the 15-minute here. Okay, I can see that we have like pretty much all of these lows, higher lows here, right? London, Asia and London failed to take out any of these lows. Okay, so I'm going to expect that New York is going to come back for some of these lows, right? Because we want to see, like I said, if we want to see price go higher, obviously, since it's already moved so high, we'd like to see a retracement first to come down and take out some liquidity in the bullish discount, and then we'll see price go higher after that. Okay, so we've got our pre-market ranges marked out here. New York high and low, which we've already traded through. Let's go down to the 1 minute chart and we'll see what happens at 9:30 here, which I think is already kind of moved through. So let's just go a little bit further back into 9:30. Okay, so here is 9:30, or prior to 9:30 rather, right? And we had these levels here, right? So this high, this low. So let's go again. Let's see, right? Again, does the same thing, right? First thing we do is we sweep liquidity into a higher time frame level. This higher time frame level is this sweep that we did over here, this line. Okay, so just so you can see it here on the 4 hour, this is that higher time frame point of interest, right? So we sweep into this high, into, like, I guess you could say the 4 hour order block over here. Okay, and then what happens? And then we get a change of character, right? So we get a sweep, we get a change of character. After that, we get a big shift down. Let's see if we get a retracement. Okay, one more candle, please. All right, there we go. All right, so now we actually have a range. So now we've got high to low, okay? And we want, so what's inside of this premium? There really isn't anything except for the wick, right? So I'm gonna have to use this whole wick here. Okay, and then I want to swing high going into that wick. Okay, so we got swing high there. Okay, like that. Right? So the premise is that now I've got liquidity built in front of the POI in my range after the change of character. I want to see price come up, sweep that level, and then come down, right? If the short happens, it'll trade outside of that. So let's see. Do we get it? No. Price continues down. All right, so we don't get it. No worries. Let's see if we get another range. Okay, there we have another range, okay? So now, next range, this is going to be continuation, right? So now we have another range. I still would like it to come back up here and take that out if it does, but because we're getting a trade through, right? We're not above this level anymore here. We have the new range is this high to this low. Okay, do we have internal liquidity swept? I believe we do. We do. We have this internal high right here. Okay, into a, I guess this would be the order block right here. Okay, so we have a swing high into an order block into a 15-minute, you can see it imbalance here, right? So if it's trading into it right now, it's got to trade away from it and close below this high. Okay, so let's see if it does that. So we go a little bit higher. Okay, that is okay, but we wicked it and came back up, right? So that's not what we want to see. So we want to see it trade outside of that level. So this could still go up and sweep this. Okay, there we go, right? So now we have a reaction to the OB. We have a trade outside, right? And then we have a closure underneath that swing high that we just swept. So we can take our entry from there. Okay, and then our stop goes above. I would put it above the M15 imbalance here just to be safe. 60 points, right? And then we go for 1-to-1. Okay, almost immediate take profit there. All right, boom, boom, boom. From here, like I said, you could set to break even and then go for 2R. 2R would be here. Okay, let's see if that happens. And it does, right? Doesn't come up 2R break even at all. And then from there, once it hits the 2R, like I said, I would be just trailing every candle, right? So right here on this next candle, this trail, I'd be out of the trade already, basically. It does give me a little bit more. If I just waited a little bit, one more candle, would have gave me a lot more. But no worries, right? 2R is great. Okay, like I said, even 1R with a 60-point take profit is great. Okay, so that was this Wednesday? Let's kind of go through these quickly here. All right, was there a, let's look for the buy trade. Okay, so now we're inside of this big rectangle, this big shaded area here is that 4-hour imbalance. So we know we're inside this big 4-hour imbalance that could obviously give us, you know, some kind of reaction at any point. Okay, so that's what we're looking for here. So inside of the 4-hour imbalance, if I go to the 15, I can see I got a 15-minute imbalance, right? I could refine it to some 15-minute imbalance. So I've got here 15-minute imbalance. I've got another one just below that, right here as well. Okay, and did we sweep some liquidity? We did, right? We swept Asia low liquidity here into that imbalance. And then now we're trading back above it. Okay, so let's see if we get a move above this level here, right? So we have sweep, we have change of character. Okay, same thing on the 1 minute. We have swing high to low. We have now some liquidity right here, and we have a nice point of interest, which is this order block right here. Okay, let's see if we get our setup. Does it come back down in there? Nope, keeps going higher. Okay, unfortunate, but that's the way it goes sometimes. See if it comes back. Did we come back to our other one? No, we didn't, obviously, because we went way above. Okay, so let's go to the next day. All right. So because Wednesday closed obviously bullish like this, it's going to be a bullish bias. Okay. Again, keeping in mind that we already took out, these highs up here. Okay. So let me make sure that that is going to stay, and let's go to the next day here. Okay. Next day into, oh, I don't want to go too far. Let's go one back. Okay, so here's our next day. All right, again, we have a big imbalance below us, right, which we've already traded back into, right? So this low right here is going to be probably the low end of liquidity. I'm going to look for a sweep into that level to go higher if we're bullish. Okay, and then because we've taken out this high over here, right, like as I said, we'll see if we get a sweep above this high as our top end. But let's go to the 15. Let's see what the indicator paints for us for liquidity. Okay, this is 9, this is 8. One more, there we go. Okay, so this is just before 9:30, okay, 9:15. We can see that price is already traded outside of the range, right? So what's above us? We've got this right here. Okay, and we got these, another one above that one up there. So let's go to the next candle. Let's see what happens. Okay, we had a slight push down here. We took out those highs. Let's see what the next candle does. Okay, and then we get this move down. So let's go to the 1 minute chart and let's kind of dissect this, all right? So we've got, the first thing that we got is, let's go back to before we took this out, okay? So the first thing that we did was we had a sweep, okay, of both of these levels here. We had a sweep of this level, and then we had this change of character, which is the trade below here, okay? And then now what we want to see is we want to see a range form. So that obviously didn't happen. That gives us our range. All right, now this range here is our high and low. And then we want to see internal liquidity. All right, let's mark out our OB first, right? It's going to be the OB, or, we could say the wick up here, and we can extend it down to this OB. That's our point of interest in the premium, okay? We want an internal high formed. So does it do that? Yes, it does. Okay, we got an internal high right here. Okay, and now we want price to sweep that, okay, and close outside of it, but we want it to tap into the imbalance or the order block, which it hasn't done that yet, all right? So we still need to get it to go up there. So this is actually now our liquidity. Okay, now we have price trades into it, okay, and now we're sweeping that level. Let's see if we close outside of it. Nope, go through. Okay, now we have a sweep of this level. Let's see what it does first. Okay, and then we close through. Okay, remember, here's our internal high right there, okay? So we close outside of the high that we swept, and close outside of the order block and the point of interest, okay? So we could take the entry right there, short position. We also invert this imbalance as well. Okay, and so we put our stop above here, 40 points, and we just go for our 1-to-1. Okay, and we get that no problem. All right, set the break even, go for a 2-to-1, and I think this is where we lose this one, right? This one doesn't come back. Oh, we did get it, okay. All right, this almost comes back to our break even. It still gives us a lot of wiggle room here, right? But then we get our nice little 2R. Okay, and then we would trail the candles and then we would get stopped out, right? So you guys can see a pattern here, right? There's sometimes where you will catch a monster, right? Like that other trade. But in most cases, the 1R or 2R is probably going to be your best bet, right? And even if you're just getting 1R on 40 points, I mean, it's still a pretty good target and take profit. Whoops. Okay, so let's see if there was anything on the opposing side. So we have all of these lows here. Okay, let's see if there's any prominent 15-minute lows we can take out here. So what do we got? We got this low, we got this low. Let's see. This low is one of them. And then this one here. Okay. The indicator's marking out the swing lows, relevant swing lows for you. Okay. We can see with the red lines here. If you want them to extend out a little bit further, you can always adjust that if you need to. Let's see which one this actually goes for. Okay, there's a sweep. So we have a sweep of this level. Let's see if we have a change of character. We do, right? So we have sweep, change of character here. Oops. Okay, now we need the retracement for a range. Which really doesn't really give us much here. Nope, this one just goes. So another one that potentially could. So here I mean, if you take it right off the change of character, obviously you would catch a monster, right? Right off the sweep. So you could do that, but just giving that extra layer, right, that we look for, not just having the change of character, because here obviously the change of character is really close to where the sweep is. So this would be a good trade with a good risk reward. If we're taking a short based off of the change of character, like for this example, right, then now our entry is down here, right, and our risk reward is a lot worse, right? Yes, we do get a 1R plus, but if we come down to here and we're not even getting 1R, it's not going to be a good trade, right? So in this case here, obviously, yeah, the change of character happens. We have a very small risk reward here. You could take this kind of trade and maybe you get a good runner out of it. But if we were waiting for the rules, of the internal range forming a sweep and then trading back into the discount POI, this didn't do it, obviously. Okay, this was Thursday. All right, let's go into the next day here. Any questions so far? You guys are getting it, right? Nothing, good to go. All right. So let me go back to this here and just make sure we're ending the day correctly. Okay. All right. So this is the last day of the week here, Friday. Now we did catch a trade here on Friday, but we got stopped out at break even for going for the 2R. So we'll go over that trade in just a second so you guys can see it. Here we have the daily candle, which is bullish. Okay. However, we did close. Let's see. I think we closed inside. Let's see. This high is 257.25, and this close is 251.25. Yeah. So technically, let me just make sure. There we go. Okay. Technically, we should have closed underneath, which we did, the previous day's highs. So that should be bearish. I'm not sure why it says bullish there. Okay, we'll figure that out later. Maybe if I change this, it'll change. All right, so we should have a bearish bias going into the day, right? Because we took out the high, but then we closed back inside the previous day's highs, all right? So now I want you to take a look at all these highs that we've taken out here, all right? We've got this high that we took out here, okay? And then this high itself over here that we took out as well, right? And now closing under. We do have a lot of liquidity sitting up here above these equal highs and you know, even above here that we could go for later. Okay, but we just took out this level up here, right? And so again, if I want price to go higher, what I want to see price do first, I want to see it go back down lower, take out some liquidity, and then go higher. Okay, so here we've got, you know, some lows that we can sweep potentially. We've got a little imbalance here as well. I'll mark the bottom end of it. All right, so now let's see what that lines up with on the 15 in terms of our range and the day. So let's open this day up. Okay, there's a little CPI news here. Let me just go back here before 9:30. All right, so if we had CPI news, we were expecting a lot of volatility. We didn't get much, right? Because of everything that happened already in the week. You know, I wasn't really going to, you know, expect CPI to do a big thing unless it was going to be a big reversal. Okay, so here you can see that we have some lows. Okay, we have some highs here. This high right here was swept, the Asia highs, going into London and New York. Okay, so London, we had not yet swept out those highs. London, what we did actually was take out these lows, and I don't know if you can see that very well, but that was swept out just barely, okay, with some divergence as well. You can see the divergence lines here with both ES and YM, okay, and then price moved away. Now look right here, right, this is a London setup, okay, so obviously we have, you know, potentially a London setup here. We can look at that on the 1 minute to see if there was anything there. But here you can see we have the Asia highs being swept out, right? This little tiny swing high, and then we sweep that level out, okay, coming into the 9:30 open. So let's go to 9:30 here. All right, now we've got the high and the low. Okay, so let's just play price forward. We're going to wait for one of those levels to be swept out. And we get the high. Okay, well, it's a little bit too quick. Let's go back. Okay, so here we get price sweeps out the high. Okay, and then we come back down. Now, we have a imbalance here, which we invert, right? Let's make sure that that is an actual inversion. Okay, so yeah, we've got an imbalance here. We got an imbalance here. We close through it. Okay, so we've inverted that imbalance. Now, you could use this as a change of character, okay? Because sometimes what will happen is you'll get a change of character, but you won't get an inversion. Sometimes you'll get both the inversion and the change of character. That's going to be the strongest, okay? But other times you'll get just the inversion and not the change of character, right? So you can use this as saying that price has, in fact, you know, confirmed the sweep if we get an inversion for a change of character. And then use the same rules that we look for after that. So when price comes back now and starts to, you know, retrace, okay, this retracement here is going to be my swing high and low, okay, and then my point of interest is going to be, in this case, it can only be the order block in this case here, and this high right now. So I need to see this form a swing high, which it forms the swing high there, like this. Okay, so there will be something like that. Okay, so we got the order block itself here, we got a swing high, and then we have price moving away. So we want price to come back, sweep that swing high, and then come down. Okay, price doesn't do that though, I don't think. So we get a move through here. Okay, I think I take the second one. So yeah, so after price comes down here and breaks this structure here, we get the continuation, right? So continuation is from here to here. Okay, we have the internal high, and then we have the order block there, right? So that is an internal high, yes. So we get that. Sweep this, okay, and then we have the order block here above that high. So the trade would be when we trade above this level right there, and we hit the order block there, right? And then we trade outside of it. So technically you could take it right here on this candle closure, okay, and take that as your entry, short position. If you want to feel a little safer about it, because this could also create an imbalance, right? So you can wait for that to like see if we get an actual imbalance created. Nope, it's just a little wick there. Okay, then it trades above. Let's see if it goes above. One more time. Oh, it hits that level there, that 50 level, and then we get there, that closure. So you could either take this entry right here, or you could take this entry right here, right? 324, I believe this is the entry we took. I think it was around 320 was our entry. And then we had our stop above the highs up here, okay, for 50 points. And then we were going for our 1-to-1, which was, I believe, right here, 270, okay? And you can see price jiggles around, right? We get our 1-to-1. In this point here, we held on to it to go for 2R, had our trade at break even, and then we got stopped out at break even, right? So if we just taken the 50 points, so it would have been good to go. And then you can see that this does go on to go higher and take out that high, right? So if we had held it on for the full stop, we would have gotten stopped out, which would not have been good. Okay, but look, we got another sweep. Okay, so I'm going to redo this. Just clean up this chart a little bit so you can see it again. Okay, we'll do it again. All right, so look, we have a sweep. We know this is a higher time frame point of interest because this was already established previously, right? For the last point of interest. So we got a sweep there, right? And then we have our change of character. Okay, change of character here. All right, I think that is the last swing. Yeah, so okay, so, change of character there. Then we have retracement, right? We've got our range, high to low. Okay, and order block inside the premium. We've got a couple swing highs. We even have a swing high up here. So that's not really a good thing, but this is the cleanest point of interest I see. So let's see if we form something just below that. Not yet. Right there. Okay. So yeah, right below. Okay, now we want to see it trade into this level and then trade away. So right there, closure through, right? You could take right off of this candle right here, or you could take this one to be safer, but obviously your stop would be bigger. Okay, so if I did this and I put my stop just above the order block here for 30 points, okay, and then I go for 1-to-1. See if we get it. Oh, just stop us out. It gave us about 18 and then stopped us out. Okay, so obviously it's not always going to work, right? Obviously sometimes you're going to get some conditions where you're going to get stopped out. That's no big deal, right? But you know, let's take a look at the next one, right? We get another sweep. Let's see if this happens again. Get another sweep. Another sweep. And the change of character. So look, let's see. Sweep. Change of character here. Even change of character here, right? So there's no range yet. Let's see if we get one down. Oh, it's just going to drop. So this is one of those big ones. Okay, not even there. Okay, well, looks like we missed this move. So yeah, and then this obviously. So now look, see how close this is. See this change of character, how close it is to the sweep. In these cases here, right, if you take it right off of the change of character, your stop isn't going to be that big, right? It's going to be about 30, 35. You know, for cases where you can see here the change of character like this would be huge, right? If I were to take this entry off of that last trade, like my entry would be here, my stop would be all the way up here, right? Which still isn't too bad. It's like 70 points, but it's like this is half, right? Like my stop can be just above this high right here. 25, I can put it just above the psych level here at 30 points, right? And then I can get an easy 1-to-1, and obviously I can get way more than that, as you can see. All right, let's see if there is a buy setup here on the bottom end. See if there's any prominent 15-minute swings. I guess really that one that we just took right here, which is the New York low, we hadn't taken that yet, right? We had not taken the New York low yet. So let's see what that would have done. Okay, let's see if we get a change of character. Now, change of character on this move would be a lot bigger unless we make another one. Let's see how we do. Okay, right here. Right? Now, why is this a change of character? Because we have divergence, okay? Normally, obviously, you'd want to see a swing high like this, come down and take out that low, right? But because we have divergence here, I can see it from the indicator will show me that I have divergence, right? So which means that this was taken out on YM, which means it was a lower low, okay? Which means I can call this a divergence and a change of character here on this NQ chart. Okay, now again, you could take it right here off of that close because obviously it's so close, right? So the stop is only going to be 20 points, okay? I'm fine with that. If it comes back against me now, you know, like here's 20 points, right? Where's my 1R? It's right here. So let's see if we get that. Right? So we get 20 points. Right? Now I got my 1R, and then I can go for 2R. Let's see if my 2R hits 40. And nope, I get stopped out. Okay? So, you know, if it's very, very close, you know, if it's not that big of a stop, you could just go for that quick, you know, change of character entry. Okay? But if we were to wait for that entry to give us the entry we're looking for, let's play this whole thing out. Okay, so we had the change of character, price came up, right, and then we had the retrace. So this would have been our range, this high to this low. Okay, our point of interest would have been looks like this, right, this swing low, because that's what formed inside. And then we would have had this point of interest right here, this order block, and this imbalance. So I'm going to use this order block right here. Okay, now this would not have been an entry. Why? Because we never got the trade away outside of the range. We never got closure back above this low that we swept, right? So you can see price, all we did was dip into it and then we just went right through. So there was never an entry here. So this would have saved you. This also filters out bad trades, right? If you would have taken it just off of, you know, the reaction to the OB, then you would have gotten stopped out and you would have lost a trade here. Okay, but this will give you a good filter to let you know, okay, well, I'm not getting the reaction I want from this, right? So now it's going through, and now I would have saved myself a bad trade. All right, now let's see if it does it on this sweep now. If we get a change of character on this one, okay, so there we go, right? Here's got change of character. Again, see how close that is, right? Very, very tiny change of character versus what we swept. So the closure would be here, stop would be 20 points about, okay, 20-ish points. Obviously we get the 1-to-1. Let's see if we get the 2-to-1 without getting a break-even trade. Nope. Moral of the story is your 1-to-1 is always going to be good, but check it out. Okay, so here we have, this is our range, okay, here's our range, here are the points of interest inside that were created, the sweep. Okay, this is our point of interest, the order block down here. Okay, so this would have given us an entry. So we had price take out the low, trade into the order block, and then trade outside of it. So our entry would have been right here. Okay, and then our stop would go underneath the order block, 20 points again, so still got a pretty good stop. Let's see if we get 1-to-1 right here. This came close to our stop right there. Does it go? Does it go? Yes, we do. Look at that. Came very, very close a couple times. But that's our 1R, and then now 2R. I'm assuming we'll get just based on the structure. Nope, we didn't get 2R. All right. Well, let's keep it going. Let's see what happens. Because let's see. This is 2 o'clock, right? I think we did get a pretty big move up at the end of the day. So if we just kept our original stop, I mean, 20-point stop is pretty good, right? It's not too big. You can weather a big drawdown if it comes back against like this. And look at this. Right? This is how we ended the day. This would have been 4.5 hour, almost 5 hour trade here, right? Just based off of that. But you guys can see how the criteria saves you, and it also gets you some really accurate entries, right? If you wait for price to come back and take that liquidity before it hits, rather than just taking the change of character. And if you do take it just off of the change of character and your stop is big, right, then you can wait for the internal liquidity. Okay, so that was this week's price action.
Hey Jeff,
Yeah, James.
can you? I want to make sure I'm understanding you correctly on the divergence.
Mm-hmm.
If you have a divergence, you don't necessarily need to peak the point of interest.
Okay, so what the divergence lets you do is it tells you if you, like, for example, here, right? You can see we had a sweep, right? So the sweep is because this wick came down lower than this low, okay? So on this chart, on this NQ chart, we have a lower low, all right? But on on YM, all right, that's where the divergence happens because the indicator will tell you which pair you have the divergence with. So this low is actually higher on YM, right? So if you were trading YM and you saw that, right, then you wouldn't necessarily need this to sweep. Like, so if you were looking for price to sweep this low, but you saw the divergence, then that means that you don't need the divergence. You don't need the low to be swept on that chart because we got it on a correlating pair. Okay, just like the entry over here. Where was it? Right here. Let's go back to this. Okay, let me just go back to this. Okay. Wait, no, sorry, it was this one. Was it this one? There it is. Okay. Yeah, so right here, you see, like, if I was to look for a change of character here, right, I would need this swing high to come down and take out this swing low, right? That would give me a sweep. And then when price comes back over this high here, that gives me a change of character because I have that high making a lower low, but then getting traded through, right? But because we have divergence here, right, I don't necessarily need to see that happen. I don't need to see it go lower, right, because it went lower on YM. So because I have divergence, I can treat this the same as a sweep, right? And then I can confirm this change of character because I have that divergence. Right. Same thing as if we were looking for, the opening move, right, to come down and sweep something. Let's say we were looking for. Let me see if I can find an example here. Okay, yeah, like this right here. Okay, see this move here from this low to this low right here is higher, right? And then you can see price goes up and goes up quite a bit. Okay, so let's say we were looking for price to buy up from here, and we wanted to see price come down and sweep this level, this low, to give us the buy setup, right? But it never does that. In fact, it goes just before it, right? It makes a higher low, and then you can see price goes up. But if the indicator shows us that we have a divergence here, then we can assume that price has taken that low out because it did on another pair, right? On a correlating pair. So this would be a sweep on some other pair, but on NQ, since we have divergence, we can treat this like it swept that low, and then we can just go with everything else that we were looking for in our criteria. Does that make sense?
Okay, yeah. I understand it now, Jeff.
Okay.
Thanks.
Right. So, and that also, it kind of also helps you with, like for example here, right? We have divergence. We can clearly see that this is higher, right, on this pair or this chart. Okay, but on YM, it's going to be way lower. It's going to be all the way down here. Okay, so on YM, if you were looking for price to sweep that level, you didn't get to sweep on YM, but you can see that there's a divergence on NQ. Then you can assume that that price has taken that level and then follow everything else in terms of the checklist, in terms of the steps, and the entry criteria that we're looking for. Right, so that's what helps with with tracking the divergence. Sometimes you'll see that we got a sweep on something else, but we didn't get it on NQ, and then we can treat it as a sweep. Another thing we use the divergence for is protecting that high, right? So that now we see that price has swept that level, okay? Then we can put our stop above that level, because obviously if divergence is holding, we're not going to expect price to go above that level. So it acts as like a stop level to help to put our stop losses. Okay, so that was this week's trades, right? Obviously, there's some good, some bad, and you can see how, like I said, the setup happens over and over, right? So in order for you guys to get really good at seeing the trades happening over and over, obviously this helps, right? Looking at it after the week's over, in hindsight, great. But like I said, what really is going to get you to help you with your execution and that muscle memory is to actually get that live execution practice.
That was good. Hey, Jeff, one follow-up question here. In regards to the session times
Yep.
and the sweeps needed for those session times compared to the higher time frame POIs.
Yeah, so you definitely want them to happen in that New York, time, that open time, right, from 9:30 to 11. That's the main time where we look for price to happen, to use that. For that setup to happen. But obviously after 11, right, in the afternoon session, there are setups that occur as well, as you can see, right. It does happen between 11 to like 2 o'clock, right. That's another window that you could trade for New York. Those would be the two times that I would look for the setup to happen.
Gotcha. So let's just say I'm in Asia session,
Mm-hmm.
right? And I don't have a sweep of the Asia lower high.
Mm-hmm.
And I get a sweep though of a higher time frame POI within that Asia range. What would you suggest? Do I stay out of it or do I wait until I get a
Within
sweep?
the Asian range, like it hasn't swept the Asian
Within the
range.
Asia range.
Yeah,
Correct.
I would stay out of it, because that to me is just more so accumulation. And then like when you come into London, London will probably sweep that range.
Okay. So, and the same would go for London. Let's say
Yep.
we swept the low in Asia in London. We're going to be targeting the Asia range high.
Yep.
Okay. And after that Asia range high is taken, we will wait for New York to come in to sweep the London high, potentially.
Right.
Okay.
Or whatever's
And
just
then,
whatever's just closest, right? In the proximity at that point, whatever range is formed prior to that opening price, right? That's why we use the most recent swing high, and not so much like London high, right? Because London high is over here, right? In this case, or Asia highs. But you can see that prior to New York Open, we've already swept those levels and created new ranges, right? So we want to look for those sweeps.
gotcha. Gotcha. So the Asia range is set in stone, right? That
Yeah.
is
Yeah.
the one thing we got to have.
Yep, I mean that's going to be pretty much like cemented on your chart every day, so you have a pretty clear level of what that is. The other ones are a little bit more subjective. London high, London low, New York high, New York low, right? Depending on what you set your times to be, what those windows are. Obviously, but every 15-minute swing that occurs, prior to the open, I would use just the most recent one, and then follow, to see what happens when we sweep those levels. If we get those, those check marks on everything, because if it doesn't, then you just wait for the next range to form. Just use the next range.
Gotcha. Sounds good. Appreciate it.
Yep. Okay. Any other questions? All right, good stuff. So, you know, we had a little technical difficulties in the beginning, but hopefully it's all figured out now. But yeah, that's going to do it for today. Hope you guys enjoy the rest of your weekend. If you have any questions at all, go ahead and drop them in the comments below. But yeah, enjoy the rest of your weekend. I'll see you guys on the next one. We're going to do live streams on the channel here starting Monday. So you guys can bookmark, subscribe. Make sure you guys are on the notifications so you guys can get notifications when we do the live streams starting Monday. All right, guys, take care. Enjoy your weekend. We'll see you guys on the next one.